Dan Loeb's Third Point has released its fourth quarter investor letter, so the fourth quarter from 2021, in which he argues that Amazon is trading at a 30% discount and is near a turning point. I just didn't want to sit on that news, and we can discuss this for a moment and then get back to the other conversation. But again, this is a bullish outlook from a very astute investor who takes a look at the landscape right now, particularly in mega cap tech, which has not been immune to the pullbacks that we've seen in the market. Now, obviously, those stocks haven't pulled back anywhere close to the degree that some of those higher valuation stocks and no earnings, if you will, stocks have put forth. I'm wondering, Jason Snipe, I can't remember, I believe that you own Amazon, and forgive me if you don't, but I'm sure you have an opinion on this view by Dan Loeb that it's trading, as he says, at a 30% discount and is nearing a turning point.
Yeah, so I do, Scott. And, to echo a lot of the points that the committee has made, just from a macro perspective, it is, a foggy area right now. I mean, almost 75% of the S&P has reported at this point. Typically earnings tend to be a catalyst for growth and earnings in the market. We have a geopolitical issue that is very concerning with the Ukraine crisis, that we're seeing. And then we have a Fed that we're trying to figure out what the move is going forward, right? So there's a lot of uncertainty around how much and how fast, the velocity, in which that they tighten, I think is concerning for the markets. But as it relates to Amazon, when I look at the cloud and just the cloud businesses, whether it's Azure, whether it's AWS, and some of the other cloud businesses out here, I think that's a huge opportunity from a technological standpoint. And of course, a lot of these big mega cap tech names have not felt the pain like the rest of the market has. Not that they're not immune to some of what we've already discussed from a macro perspective. But I do like Amazon here. I like Microsoft as well. I think those are the two mega cap names that I think could continue to ride out some of the turbulence that we're feeling right now.
Josh, I mean, Loeb is obviously looking at a lot of what a lot of other people are looking at. And the fact that you have a stock that's near 20% off of its high for the year, and it has pulled back, and you own it as well. Herein lies the market in which we find ourselves. A lot of stocks are down a lot. And at some point, they become too good to turn your eye to, right? That you have to, at some point, view the highest of quality stocks as having a good entry point, down 20% off the year high.
Dan Loeb is one of the most successful stock-picking fund managers of our lifetime, and having him recognize the value in Amazon as a shareholder in Amazon makes me feel good. I've frequently made money in stocks that he's come into. Unlike a lot of his contemporaries, he doesn't do macro tourism. He doesn't wade into debates about what the Fed should or shouldn't do. I think he focuses on finding companies where either they're undervalued and he can help, or they're undervalued and the market on its own will recognize that. So I don't know which case this will be, but I don't know anything about what he's saying other than I agree with it if he thinks the stock is underpriced. But here's the thing, though. So what? So I think the company already is worth $5,000 a share. It doesn't mean it's going to go there. If you look at AWS, it's $71 billion in revenue last year. So what multiple would you put on that as a standalone entity? Would you put 10 times sales on that? I think that's somewhat reasonable given the growth rate, the dominance. So could AWS be a standalone $700 billion company if you want to discount that back and say $500 billion standalone company day one? This is a $1.5 trillion market cap. So, is AWS worth a third of the market cap? There are so many moving parts in Amazon. It's incredible. And I think some of the parts alone, it's worth a lot more. Then you consider the logistics they're building out. They'll be the only company that has this logistics network to rival UPS and FedEx. And what's that worth? I don't know. So there's a great argument for Amazon to be higher. But so what? The market may decide it doesn't care for about any of the things I just said for the next year, the next 6 months. I don't know. Amazon hasn't moved since June of 2020. which is really remarkable considering how much the earnings have grown, the cash flow, the subscribers, the Prime business. The growth has been explosive. The stock has not reacted to that. So it's great that people are recognizing the value. The question becomes, when will the market actually care? And it takes a long time for that. Remember, we were having conversations about how cheap Apple was from 2010 to 2012. It wasn't until Icahn got involved, started going out to dinner with Tim Cook, pushing him to raise the dividend, pushing him to do buybacks, that value was unlocked, and the multiple on Apple tripled. Could that happen for Amazon? Maybe. It's not as cheap as Apple was then, but I'd love to see a re-rating. I'm just not convinced that we're going to see that anytime soon.